And good evening, everybody. This is Michael Filighera. I am with logicalsignals.com and tradershelpingtraders.com. And this is the Elliott wave update for the S&P 500 for Thursday, September 9th, 2021. The market continues to work through what is best labeled as a minute fourth wave correction. It is turning into a very complex affair. And so I'm going to try to bring us up to date and see where we're headed from here. First off, I need to say that the Thinkorswim platform, the TOS platform that I use to do my charting on, has switched over to the December contract. So that's why you're going to see a gap and basically lower prices than where the September contract closed at during our regular session. Nonetheless, we continue to count a minute fourth wave correction. And within that, I've now reassembled what we've gone through. And because we had this and then we had an initial slide, this actually happened in globex overnight, and where it went down and made a new low beyond this, which is where we ended yesterday, or the low from yesterday. The market came back down, made a new low, and then rallied strongly, and then started to come back down again. And in fact, has moved to a new low below our globex session low from this morning. And so what I've done is I've just had to take down the labeling one additional degree. So these are now sub-minute level. And still the same, where it's an A, B, C, we get a triangle, that's an X, an additional A, B, C, but it is wave A of, so it's sub-minute A of minute 4. Then we have sub-minute B of minute 4, because this is now unfolding in what is appearing to me going to be a 5-wave structure. And that would suggest that it is a C wave. That's kind of what I'm hoping for. And now I'm just going to bring my chart. Let's go to the 30 minutes so we can see it all the way down. And so again, minute 3 ended here. And now we're looking for this minute fourth wave. And again, this is all a part of 3. So let me go back out to the hours so I can see the whole thing. You can see 1, 2, and this 3. The 3 was a very long, very extended wave. So complex 4, sure, why not? So anyway, so we do have this complex structure, A and the B, and now we're coming off in C. Now, C waves, when we want to relate it to the A wave, that their most common relationship is that it will be equal in length to the A wave. And that comes in right here at 44.65 to 66. So it's not too much further down from where we are, but then we have additional at 44.50 and 44.41. I don't necessarily want to see it coming down towards 44.26, although our break zone is at 44.15. The market should not break below 44.15 if indeed its intent, or the wave count, as suggested by the wave count that I'm using, that we still have a minute fifth wave up to complete the minor 4, which ended right there. So in order for this to remain a fourth wave, it can't break below the endpoint of wave 1. That's the rule. If that's the case, then it's no longer a wave 4. So right now, we're still in good shape. And even if it comes down here, even if it comes down to 41, we're still in good shape to have a decent rally, and again, move it to new highs. Now, the market, I'm sure the feeling in the markets over the last, since Labor Day, is more fitting with what people believe happens between Rosh Hashanah and Yom Kippur. We have a weakness in the market. That certainly is what we are witnessing. We are seeing it. There's always going to be a lot of other reasons that people are going to toss out there. That's the purpose of the press. Financial press is to just tell us what the world thinks is going on. But in terms of Elliott wave does not take fundamentals or news into consideration. What it will show you is that a prospective move is due and going to happen. In this case, it was a fourth wave correction. And so that's what we've been counting down. Now, has it expanded further than I originally had anticipated? Yes. Originally, I thought that 45, 10, 75 completed it, but we were shown otherwise, that was not the case, and it started to break down again. So that we can all chart, and I can put in what I believe it is. And now that's exactly what I'm doing, that it was a complex wave A of minute 4. It was a complex layer because it was a double ABC down. Then we got a pretty normal B wave, and now we're getting a pretty normal C wave. And that C wave should continue at least through tomorrow. I would imagine that we're going to see lower levels again tomorrow. And I don't know how busy it's going to be because, again, it's a Friday. It's a weekly expiration Friday. And so normally we don't get a whole lot of activity during Fridays now. But that's not a hard and fast rule, so we can always hope we'll get some activity and get some good trades or trading opportunities. So for tomorrow, I do think we will continue to move lower to complete wave C. Just kind of bring that open, which I wish my computer would just be friendly and do for me. There you go. That's all very readable now, isn't it? Okie dokie. Let's try it this way because I want to take a look inside. There. I want to take a look inside this wave. So if I get anything, I get wave 1, 2, maybe 3, 4, and this is 5. Could be. Maybe a little bit more. Because again, we have that support just down below. And maybe we get there during globex, or maybe we get there tomorrow morning. But I am pretty much trying to count a 5-wave structure down. And if this may be just completed wave 1 of C, wave 2 of C, and now we're in wave 3 of C, we get a 4 and a 5. So there's a couple of interpretations. So we're just going to let the market unfold and tell us. And everything is kind of lined up for it to continue to go lower. All of our moving averages are now turned down. And so when it is complete, we will be then looking for an initial 5 waves, and that will be based on the hourly chart, an initial 5 waves up on the hourly chart to give us an indication that, number 1, the lows are in, and number 2, minute wave 5 is now underway. If the market continues to break down and starts to break below all of these levels and comes down and breaks 44.15, and the exact number is 44.14.75, then upside will be negated for now. And more than likely, this point will have completed all of the sequences on the way up. And it's not necessarily how I would expect the market to start coming off, if indeed that was the high. But it may be the case. It could just be exactly what's happening, and we will figure it out once the market tells us. But right now, I'm just saying that if it breaks below that level, I would expect, number 1, some stronger acceleration lower, and for the market to begin to just really break through any support levels that we might have. And upside, if we get down here and we can count 5, then, or any of these levels, then I'm going to be looking for the market to turn and to begin to head higher. And of course, then we're going to be looking at our moving averages where they are from down there, but also we would expect some, at least a decent rally to get us back above 4,500 and well above 4,500, and possibly even up as high as the 200-day moving average. That would be a good start. So for tomorrow, again, I'm not expecting a lot of activity. It should be pretty much on the quiet side as it is an exploration. But so the surprise would be is we get a lot of trading opportunities. But I think we'll be narrow on both sides. I think our ranges will be tight again. And initially we might see everything in the morning. And then it just falls into a range. And and things expire for the day. That's where I'm going to leave it. Our next update will be on Sunday.